When a lion walks up and sees an elephant, he thinks lunch. An elephant thinks run. And it's all mentality. Because when a male lion walks up, he may be outnumbered by a pack of hyenas, but I'm king of my jungle because of my mentality.
What happens when you're a gazelle and you're not being pushed, you're not being prodded, you're not given a reward, nobody's encouraging you? What happens when you're a gazelle and the lion's not chasing you anymore? You stop running. But what happens when you're a lion? When you are a lion, it does not make a difference. You realize that if your family is going to eat, that if that pack of lions is to survive, then you gotta go hunt. A part of being a beast just ain't eating a gazelle. A part of being a beast is the hunts. It's the hunt that they're excited about. They like to see the gazelles run. Then boom, they take off. Because real lions like to hunt. They love the process just as much as they love the prize. And some of y'all just want to score. You don't like the process. You're not in love with the process. A true hunter's goal is not the prize. A true hunter's goal is to hunt. That's what they live for. They live to hunt. They don't just live to catch it. It's the whole process. When you are a true hunter, you don't go by time, you go by the gazelle. When you are a true hunter, you hunt until you get a gazelle, and you don't stop until you get one. And then you get another, and then you get another, and you get another. If you're gonna do what you say you're gonna do, be what you say you're gonna be, you're gonna have to lion me out. You a gazelle, you gonna come up short. You a gazelle, you gonna have an average experience. You a student, I need you in lion mode. You an entrepreneur, I need you in lion mode. You trying to lose weight, lion mode. You can't do nothing significant in gazelle mode, nothing. Nothing impressive happens in gazelle mode. Nothing happens in run mode, give up mode, quit mode, scared mode, fearful mode, nothing happens. Everything happens in lion mode like I'm coming to get you.
All right. Guys, yeah, I know, I'm sorry. I'm getting used to the audio stuff here. Y'all just bear with me. I appreciate your patience. All right, we got your boy Milt in the house. We got RPS. I'm gonna let him go first tonight. This guy knows a lot about what he's doing. Let me just go ahead and exit out of this. So I'm gonna go ahead and get started. Dwyane Trade to be here soon. And then we got Bentley Trades, who is a small caps, basically just a legend. Let me see if I can get you all unmuted here. RPS, can you unmute for me?
Yep.
Hey, what's going on, buddy?
Oh, not a whole lot.
Milt, how about you? Does it let you unmute?
Yeah, there we go.
Hey, what's up, man?
What's
How
up,
you doing?
man? Good, man. Thanks
Good
for
to have
having me.
you. Absolutely, brother. So basically the way this all got started was I started educating and helping out a group of friends of mine. I have like 12 to 15 people that I work with on a regular basis. And really, I just wanted to get them some perspective from some people that have been doing this longer than me, or have at least different, let's just say, specialties than what I have. And so it kind of all got started from that about 3 weeks ago, and we have had nothing but a badass variety of successful traders coming on since then. And it just makes me happy to see that there's no one right way to do this stuff. So I'm glad to have you guys and have you share some insight for us today.
Yeah, thanks for having us, man. Appreciate it.
Man,
Absolutely.
I appreciate it. I like your vibe.
Absolutely, brother. Oh, Dwyane Trade, what's going on, man? You should be able to unmute yourself.
Yeah, what's going on? Can you hear me?
Hey, yes, sir. Glad to have you.
You didn't tell me I was gonna want to run through a fucking brick wall when I joined the Zoom, dude. Fire me up with that starting video. I love it.
I'm telling you, I love that freaking video. I watch it every day, man. It gets me.
Yeah, Ray Lewis will have you ready to do anything after his videos, man.
Dude, it's great. Yeah.
Hell yeah.
He's got you ready to fight the world.
Yeah.
That's right.
Right on the street, start hitting people.
That's right. Well, hey, man, RPS, if you're ready, man, I'd love to just go ahead and introduce this guy. This guy manages a fund. He's probably going to have a little bit different perspective than what you're used to hearing on this call. And that, to me, that is completely open, and I'm ready for that, because we talked earlier yesterday about trading recently, and if I'm not mistaken, he told me he hadn't taken a trade in probably like a month. So
Yeah, it's
I
been
would
about
love to hear
5
what this
weeks.
guy has to say. Yeah, absolutely. So feel free to kick it off. If you want to share your screen at all, man, you're welcome to do that. If you just want to chat, it's all you. Just
All right, yeah,
however
no
you want to
worries.
do it, brother.
So yeah, my name is RPS. I am the Chief Investment Officer over at BC Advisory Group, and then I currently sit on the GP and trade team at Abundance Asset Management, as well as an advisor to the board of Abundance Asset Management, which is the hedge fund. Um, a lot of our trading over there is a lot different than what you guys will normally do. I know a lot of people in here are probably options traders, and we are the people on the other side of that. We are the ones selling you the options. So whenever you're losing money on your options account because you're taking mismanaged trades and whatnot, we're the ones profiting from that, and it's very profitable if you know how to do it properly. Um, but for tonight's thing, I am actually the person who created and came up with the 30-30, the 30 WMA trading strategy that I'm sure many of you guys have known and seen around Twitter, and it's caught a lot of attention and from some people. But I want to dive into that a little bit. I know I was talking with you, Alan, and you said that a lot of people had a lot of questions about what it was for and what it meant and how to use it properly, so on and so forth.
That's exactly right. Yeah.
Yeah, so what are some of those questions that you've seen, or if any of you guys in here do have questions about that, what are some questions that you guys um have about that trading strategy? I know there's been a lot that have been asked. I don't know any of them. I can only go off of what I told. The people who are out there teaching it currently don't know the full story, unfortunately, or kind of misleading people based on what
I
it was
think
designed for.
I think the main thing would be as to why the 30 WMA works. I think a lot of us are used to using EMAs and smooth moving averages. You are probably the first one that I've heard use the weighted moving average. So if maybe you can give us some insight as to what that means, why you're able to trade off of it, I think that'd be a good starting point for most people.
Okay, yeah. So the WMA 30, I was actually introduced by a close friend of mine. He is in the cybersecurity and intelligence gathering space, and he's done work for SpaceX, Tesla, CrowdStrike, so on and so forth. But whenever he was doing a pen test for the code over at a market making firm, he had actually found some code strings within of their trading algorithms, and this was one of the lead primary indicators that their trading algorithms made and placed trades based on.
Okay. So how does that benefit the retail trader? I mean, I'm assuming if they're using that same indicator, I mean, are we just jumping on the whale's back here whenever we use that?
Essentially, can you turn on screen sharing real quick?
Yeah. Hang on a second.
Appreciate it.
Go ahead.
Okay, so I think it's all pretty well common knowledge at this point that not a lot of trades go on in the after hour sessions. So you have your normal day session, then you have this intermediate zone between the next market session. There's many times where you'll see these overnight sessions that are just completely dominated and ran by algos. You'll catch a break below, and it will just follow the whole way through until a certain point. Usually this is when the pre-market trading starts back on. Let's see, cross back through here. So this is 5 o'clock. This is 6 o'clock Eastern. A lot of hedge fund teams get into the office on the East Coast, about this time, and are starting to place trades and get on. Or some type of news catalyst are starting to come out after this zone of chop, pop back up, and then continuation drop into the morning for more algorithmic selling.
I have noticed a huge volume pop at 5 and 7 a.m. My time, so that makes a lot of sense.
Are you central?
Yeah.
Okay, so I think it's 6 o'clock here. Most the first set of brokers come online, and then 7 o'clock the second set come online. We have news at 6, 7, and then 8 o'clock. Primarily, the ones at 6 o'clock are smaller companies reporting different types of news sets. We do get some at 4, and then 6 o'clock some more news. 7 o'clock is when TD Ameritrade's pre-market trading comes on, which is if for those of you who don't know TD Ameritrade, one of the biggest brokers in the world at this point, used by institutions all over the world for execution. So right here at 7 o'clock, you can tell that volume is starting to come in comparative to relative previous. So that's when that comes on. A lot more big news drops then, and then you have, if it's a market day to day, you'll have news at the 7:30 hour or 8 o'clock.
Very cool. We have a question here that says, is there a certain time frame that the 30 WMA strategy works best on?
If you're day trading, I would run it always on the 5. Let me pull up the actual trading strategy, and I'll go ahead and post this in the on my Twitter again. I know it's up there. Let me pop this open. For those,
Awesome.
so it's actually changed. I need to update this. It's the indicator changed to what did it change? SVP. So SVP is the volume indicator that it runs on, but it's pretty simple. It is supply and demand based. It is looking for a cross below. Well, in this example, it's different. Let me see if I can find a better example. I haven't traded in a while. See if I can just find it close.
Guys, when he says he hasn't traded in a while, he's just been basically selling puts and making money off of everybody else.
Yeah, I mean, I haven't traded in 5 weeks on the future side. It's gonna take me too long to find an example. I know we're kind of crunched for time here.
Oh, that's okay. Y'all can always go to his Twitter page and find his strategy. It was nice of them to share it.
Yeah, but we'll just use the ones that are kind of down here.
There we go.
There we go. So overnight, if you're up trading this, I usually am up trading at this point. I have a problem. I'll be the first to admit that. But you'll see we are up in supply here, made a break below the 30 WMA while it is in our supply zone. Break, take my entry. If it were to come back up to this point here, I would have stopped out and taken the loss on the trade. But anyways, in this example, we continue to move down into to the mediary range. We had a wick test above, so whenever that happens, you can look to actually scale and take profit off the table. I usually tend to. I'll take about 25% off. We actually didn't break the trend until we were back down in demand for a full body close. So if the full body closes above, I tend to close out the entire position. In this example, it just so happened to be in a demand zone, so I would have then taken either a long here. I actually took a long here on this trade before the market opened. We had a nice rip up. This was way too fast on market open. I wasn't getting fills, and I finally got filled out here for a little bit of profit. That's okay. For here, crossed through, played the retest of it while it's in demand, took the entire ride up, scaled out a couple times here. I think on this one I scaled out 75% of my position actually. Took another 10% off here and then did a full sell somewhere up in here. And all of this will be posted on my Twitter. I'll post it again. Here's an example kind of on a range day. You could have taken some trades on this, definitely. I can't remember what day this was specifically. I know there was a reason I didn't take trades within this, but still didn't even take a trade off of this. I could have. I got a retest here, but I wasn't confident after seeing this movement go on here. Finally, after a consolidation range, took a trade off of here and didn't end up selling until we were back up in supply. That's on the actual queue itself. And then same thing here, showing the way to draw the zones for these days.
That's awesome, man. Yeah, y'all definitely check out his Twitter page and grab this PDF because this is some really awesome strategy here.
Yeah,
I know there's going to be a ton of intraday day traders on this call. I was hoping also, and thank you so much for that, by the way, but I was also hoping also that maybe we can get your opinion on quad witching for tomorrow before you leave. Like what do you typically see? What are the market conditions like? How do the premiums move? Anything that would maybe help somebody that's feeling enticed to trade tomorrow?
Yeah, so I mean, let's look at it from this way. It's a 0 DTE, so we know theta is going to be a primary factor. Today, in the early morning hours of trade session, let me double check and make sure I'm right. I don't want to be wrong. Early morning hours of the trading day, actually even throughout the final parts of the day, you had high IV going into options. So if you're holding, say, like 268 puts for tomorrow, I don't know what those are kind of priced at right now, but we're gonna have to make a substantial move past that like 268 mark for you to even be profitable, just based on the IV calcs and the amount of theta that's gonna be decayed off of your contract from when you purchased it at. I think we have like 3 or 4 trillion dollars in options alone expiring tomorrow. I think that if someone wants to fact check me real quick on that. As far as what it's gonna do, I don't think it's gonna be much different than previous. It's gonna be choppy. It's gonna be volatile. I'm gonna be doing a lot of selling of premium. But other than that, I think it's just gonna be more of another standard choppy day that we've seen, and it's gonna be high IV, high theta crush since zero DTEs. It's
So a lot of money to
definitely
be lost tomorrow.
yeah, well, or gain depending on what side you're on.
Right.
Like I'm gonna clear a lot tomorrow.
So A+ setups only. If
I wouldn't even trade.
might get a news break or don't trade at all. Yeah.
I seriously wouldn't trade. I mean, I haven't traded in 5 weeks. I did a futures trading challenge back in October when I started it. Just wanted to see how long it would take me to get a million. Started with 5 grand, went from, or was it 10 grand? 5 or 10 grand, one of the two. Went from that number to a million. It took me till March to do, and now I'm sitting at 1.5, 1.6 as of May, and haven't really touched it since. So there's no reason to go out and trade. Markets are down 32% on the Nasdaq and what 22, 23, yeah, 23 on the S&P. There's
That's
no
absolutely
reason
amazing.
to sit here and be trading. If you want to start having and looking for a longer time horizon, as you've made a bunch of profits over the last year or two, as the markets continue to rip up, you can start to look to roll a lot of those profits over into something longer term. I'm starting to accumulate here probably in the next couple weeks a position in TQQ, which is leverage, 3x leverage QQQ. So I'll be building a position from there until the market bottoms out, and I'm going to hold it for the next 5-10 years and let it run. What else?
Well, I know that's probably a little bit more advanced than what a lot of people are going to be seeing in this call. If y'all want to get with him, he does have his own Discord group, Apex Alliance. You can follow him on Twitter. This guy is really, really smart. He knows his stuff, and it's really nice to get that perspective from the other side.
Yeah. And we're doing a futures
now I don't
trading
want people to
challenge.
misunderstand. When he says he's profiting off of a retail trader, it's the people that are taking really bad trades, the 90% group that are losing at this game. So I don't think he's meaning that, he's just profiting off of everyone, so I don't want people to be offended by that. But yeah, A+ setups only, if you need to trade sparingly, right?
Yep. And then
so-
as well over in Apex, we're starting a futures challenge trading account for the month of July. I'm going to be live streaming and live trading all my futures trades for people to follow along to a prop trading account. And then actually over on the hedge fund side, we are launching a 60-day options trading challenge as well.
Very cool, man. Well, we really appreciate your time, dude. That was insightful beyond measure. I know I'm definitely going to be checking out your 30 WMA strategy. I think that the last time we had somebody describe it, it was very fast, very dirty explanation. So
well, there's a reason.
It's going to help a lot.
There's a reason for that.
Well, this is going to help a lot. I think people are really going to benefit from that. So
yeah, if anyone has any questions, my Twitter has been posted in the Zoom chat. Feel free to DM me on Twitter and message me, and I'll get back to you as soon as possible.
All right, man. Well, I appreciate it.
Thank you. Thank you so much for having me on.
Yes, sir. Let's see here. We got Dwyane Trades. How you feeling, brother?
What's going on, man? Happy to be here. Excited. I know I missed the first one when you originally invited me on, so I apologize for that. But I'm glad that you invited me back.
Oh, thank you. This is not, I never really meant for this to be any kind of podcast type material. This is just an informal chat, learning some different types of strategies from some of the best people to do it. So I really appreciate your time, man. Thank you.
And I think what you have going on here, I think there's a pretty good chance that it grows to be maybe larger than you intended. I mean, people are always obviously looking for education, those that are really wanting to learn. And just through working with traders and being on FinTwit, you can tell that they're, despite the market being not so fun right now, there are still plenty of people that are really, really hungry to learn. And that's why I love doing stuff like this. There's a lot of BS out there. A lot of I don't know. It's just whenever the market's down or whenever trading gets more difficult, a lot of drama arises. But that also brings out the people that are really just here, to make some money. So it's exciting to get to meet with this group, and I'm happy to be here.
Well, I'm especially happy to have you here now because now that you got this big boot camp kicking off, I think the more exposure we can give to that, and the more people we can get on this King Cap shit, what they all are doing is going to be absolutely phenomenal. And for those that don't know, I took the very first OG King Cap boot camp back in January. It's been 6 months now, and I can tell you, I have never had the P&L that I've had this year more than any other year of my swing trading. I've only done commons. I've never seen anything like what I'm seeing now. So the amount of information and education that y'all are providing people is just absolutely insane. So I'm really proud to have you here, man.
That's awesome. That fires me up to hear that, seriously.
Oh yeah.
And you're definitely a testament to one of those people. So for those of you, as he mentioned, we're doing a boot camp soon. And I'm not here to just like promote that or whatever, but it is I guess important to touch on that. And that Biverson, so I got to work with him, the team got to work with him really closely, and watching his growth as a trader has been phenomenal. And it's now to the point where he could definitely teach me a bunch of things. So it's awesome, man, what you're doing, as I mentioned.
Hell yeah. Well, how do you feel about breaking down one of your habitual daily trading strategy of yours? Maybe something you're looking for, or something that we can walk through together. How do you feel about that?
100%. All right, so guys, for me as of late, the most important thing has been looking at the larger trend of the market and being able to anticipate, or doing my best job to anticipate, whether or not we're going to trade in a trend or whether or not the day is going to be choppy. So my preparation, I'll do it the night before. And for those of you that follow me on Twitter, you see the charts that I post, and I'll simply go through and I'll chart basic support and resistance. A lot of people call them key levels, but where I think the fault is that a lot of people will play these quote unquote key levels as breakouts. So you break below a level, you buy puts, you break above, you buy calls. It's not so black and white. So for me, as I mentioned, I'm doing my best to determine whether or not we're going to trade in trend or whether or not we're going to chop around. When we have a gap down day like today, that to me is immediately a sign that it's likely we're going to chop around and price action is going to be a bit slower. So I'm more hesitant to play these breakdowns and breakouts. Okay, so what I'll look for is more of some supply and demand setups, or in more basic terms, I'll look to play bounces off of my levels or reversals. So let's say the market has been trading in a pretty sharp downtrend. And the reason it might not be so obvious is because we have these bear market rallies, right? So first you got to address, are we in the middle of a bear market rally, or are we trading in a steady downtrend? If we're downtrending, that's not the time to be playing breakouts over key levels, right? From a risk versus reward perspective, that makes little to no sense. But what I'll look to do is I'll look to play rejections off of these levels. So as we approach a level, right, that means I'm looking to see if we bounce. If I'm a little bit more aggressive, as soon as we tap, I'm looking to play puts. But again, it's not just watching these key levels, playing the rejections, playing the bounces. It's also taking a look at what the indices are doing. So I'll go ahead and share my screen. And something that has really been helping me as of late is following this system. So you guys can see my screen, right? Just want to make sure we're all good here.
Yeah, it looks good.
Okay, awesome. So one of my favorite guys on Twitter is Trader B Jones. Okay, Master B Jones. If you don't follow him, you gotta follow him. He's one of those like textbook veteran traders, and very simply, he calls this the system, and all it is the blue line, which is the 50 SMA, the green line, which is the 10 SMA, and this is a 30-minute SPX chart. So what I use this for is to determine the overall trend. So as soon as we get across, and let's pull this down a little bit. So if you guys remember, this was last week now, or 2 weeks ago, when we traded in this really, really tight range, right? So we were bouncing back and forth in this range, and trading was pretty tough if you were trying to play breakdowns and breakouts, okay? This would have been the scenario where I want to play rejections off of levels because I know that there's very little to no momentum. This was in anticipation of the CPI print that we got last Friday. Okay, so once we finally broke out of this range, we saw a cross of the 10 SMA below the 50 SMA to the downside. So anytime we're under that 50 SMA on this 30-minute chart, in my mind, it's not necessarily a bearish bias, but I'm very hesitant to play calls or to play breakouts, okay? So that's the first thing. It's identifying the larger trend. And if you look at what this looked like during the bear market rally, we saw a cross, okay, to the upside here. And you see how we traded above the 50 SMA, okay? Above the 50 SMA, we had a cross to the upside. So it's simply a bullish short-term trend. So in my mind, I could tell myself, okay, we're above that 50 SMA right now. The 50 SMA is sloped to the upside, 10 SMA sloped to the upside. We can look to play some breakouts. It might be time to get a little bit aggressive here in the short term until things cool off. And obviously they cooled off in this range, and then I look for a breakdown. And let's look at some more examples here. So again, the 10 SMA, right? Breaking down below the 50 SMA, guys, bearish cross. And look what happens. We get up near that 50 SMA, reject, 50 SMA, reject, all the way down. So this tells me, if I'm one of those traders who plays key levels and I want to be playing breakouts on individual names, this is not the time, okay? It's not the time. It's not the time to be aggressive. You have to use common sense. You can't try to be the hero in this market. And if that means not taking a trade, that's perfectly acceptable as well. So if your trading style, okay, is conducive to an uptrending market and is conducive to these bear market rallies, then you got to wait for those. But there's also that point in a trader's career where they have to learn, okay, it's time to maybe be adaptable, right? And you got to be able to adapt to different market conditions. Again, we see this bearish cross, massive sell-off here. We saw this bullish cross, little short-term rally. So that's what I'm doing to help me identify the broader picture. When we got in this range last week, I realized early that things were tough, that we were waiting for that CPI print. And that's when I pulled back, I sized down, I played bounces and rejections off of levels. I didn't look to play major market moves, but then we broke out of the range in this massive downtrend. So yesterday, we come up and we test this 50 SMA. So we saw post FOMC, right? Once the minutes were released, the market saw a little bit of a rally, only intraday, right? And so what we've seen after these FOMC meetings is that there's a sell-off, and I saw a lot of people on fintwit, they were questioning, you know, what's going to happen next? Nobody was entirely sure, obviously. The only thing that I was waiting for, and the reason I didn't overnight anything, obviously I would have gotten paid if I took puts, but what I was waiting for is a bullish cross here. I needed a bullish cross to tell me that, okay, momentum might be flipping, right? It might be switching, but we didn't get that. And we rejected off of the 50 SMA. So for me, mindset is still bearish until things flip around. But yeah, that's definitely a tool that I've been utilizing. And I think that understanding broader market trend is extremely beneficial in this time, knowing when to trade and when not to trade. Understanding if we gap up or gap down, it's likely that, you know, a lot of the move has already been taken out of our hands in the overnight session. So we might trade sideways, things might be slower. And those are the times to not be aggressive. Okay. When we open flat and we start to break down from key levels or break up from key levels that are coinciding with the overall market trend, that's when we can be aggressive and make our money. That's what I got. I obviously don't want to take up too much time, but that's basically been my main focus. Like I mentioned, identifying broader market trend.
I love that you mentioned Trader B. Jones's system, because I don't think, the guy, he's very vocal on Twitter. So it's sometimes a little bit intolerable to, have his notification bells on and stuff. But I will tell you, the guy's system is absolute gold. What you just described is something that I think a lot of people need to pay attention to. I've used it. I think, many people have used it, especially quietly, because, to be fair, Trader B. Jones, he's just tough to listen to sometimes on Twitter. I'm not gonna lie to you. He likes to gripe about a lot of things.
Yeah,
it is what it is. But the guy knows his stuff. That is absolute money. So I really appreciate, especially the insight when it comes to, knowing whether or not to play a trend or a breakout of some sort. Like that's so important. Knowing the market conditions that we're in, that kind of thing. So
yeah,
I think that was really good, man. I really appreciate that.
yeah. No, I definitely appreciate sharing.
Feel free to throw them in the chat, man. This guy, he knows his stuff, and he's going to be one of the head traders for the King Cap boot camp. I'm not sure what the cost is, but I'm sure if y'all go to the King Capital Twitter page, go to Dwyanetrade's Twitter page, DM him, he'll be sure to answer all those questions for you. Okay, guys?
Yeah, definitely, guys. And I think something that's important to note before I kind of wrap up my spiel here is that you're going to hear some pretty good strategies tonight. And there are obviously a bunch of strategies that are constantly floating around on Twitter, but not one thing, works or outperforms in a vacuum. So what I just showed you, I use that in context with a lot of the other stuff I do, right? And all of the knowledge that I've acquired along the way. And screen time and watching price action repeatedly is in the long run going to help you understand or, make you the best trader that you can possibly become, along with perfecting or doing your best and actively working at your mental game. That's one of, I'm a massive advocate for working at your mental game, managing your emotions. And as I mentioned, being active about that. It's not just a passive process where as your trading career progresses, you're going to learn to get your emotions under control. And it's just one day you're going to wake up and you're a robot. That's absolutely not how it works. It's a constant working process. If you find yourself, FOMOing into trades, taking trades out of boredom, going on tilt, right? You get really angry when you lose a trade. Those are all things that you could be working at, right? When you take a trade, make sure you're journaling, you write down, what was I feeling in that particular moment, and do things or do exercises to try to combat that. Once you start to feel those emotions, say, okay, maybe I should step away from the screen right now. Maybe I should go outside, go for a walk, that type of thing. Because I could show you, and every trader can show you a million strategies, and they all work, right? They all work to some degree. But acquiring that knowledge base and then mastering your emotions is what's going to help you to be profitable in the long run. And it also takes being very serious about trading. There's that stage where it's fun and you make money and you have beginner's luck, but it very quickly becomes, how serious do I want to take this? Am I serious about making money? But I wish everybody luck, and I appreciate you guys taking the time to hear what I had to say. And I appreciate the other guys that are up here sharing knowledge. And of course, Alan, you're the man. Wish you nothing but the best. Great dude, man.
Love you, brother. Thank you so much, man. That was awesome. All right. Yeah, y'all shoot him a DM if y'all have any questions, all right? Milt, what's up, dude?
Yo, what's going on? What's going on, guys? How you doing?
What's up, man?
How you doing, Alan?
Right.
Look at you out here, young mover shaker.
Dude, I'm
Got the
changing
masses,
shit up.
got 'em
I'm
tweaking
changing
out
it
here,
up,
man.
brother. I had to filter out the noise on Twitter, man. Like we gotta make sure people understand that there's gurus and then there's people that know something about something.
For sure,
And
for sure.
you are absolutely one of the people that I've been wanting to talk to for a long time. This guy is an absolute flow magician. He pays attention to what's sticking to the options chain. I mean, you talk about, I found Milt early on, and the one thing that I found different about him than anybody else was that when he finds something that sticks, you know, something maybe an opening trade that was made, and he'll tell you like this is most likely made by the same trader, or this guy's rolling up his bet or whatever. Like when it comes to this stuff here, this is the part where I really want people to sit back and take a breath and listen, because you'll see a lot of things on the internet about unusual whales and cheddar flow and all these different websites that provide options chain information, right? And this guy right here has found a way to make it work for him, and I'm really excited to hear what you have to say. So, if you want to give us an example or however you want to do it right now, whatever your focus is on, have at it.
All right, cool. Damn, that was a hell of an intro. Thank you. Hold on, how do I'm gonna share my screen. Let's see. All right, where am I at? I want Google. Okay, is my screen sharing?
Not yet.
Not yet. Wait, hold on. People gonna listen to me. I don't even know how to share screen. It does share. Okay, cool. Here we go. Hey,
there we go. We got the Yeet page up.
So I'm going with just. No, the first thing I want to say too is I appreciate the shout out and Cinnamon Allen. There's a lot of dudes on the internet that are just trying to make money off of people, and I'm trying to make my money off of plays, and just hope that y'all come along for the ride with me. So just always make sure that the people you're following are being transparent and not just saying shit to say it. And everyone on this call so far, from what I know, keeps it real. So that's cool. All right. Anyway, enough of that. So I wanted to talk about a play to kind of take you through something I'm seeing now. There's been a few big winners in the past week or two that we've had, but I just feel like looking in hindsight, I can't really show kind of the thought process. So we're going to go through like a boring stock, WBA, Walgreens Boots Alliance, why I'm excited, why the streets are excited, why I think it could be something good. I'm going to try to explain it basic enough that if you're not familiar with flow, you could pick it up, but also like knowing that some folks might pick up a few other things too that they weren't thinking about. So the way I approach my strategies, I call it the starting five. My starting five on my team, when it comes to flow and charts, they might interchange sometimes. So like now I'm introducing new tools where there's old tools, but I always have pretty much a tool bag of 5 things that I use. So the first thing in my starting 5, I played with this more recently after getting a break. That's just the hot chains and tickers. So that was the first thing that I put here. On Zoom is so annoying when they put that thing at the top and then you can't
I always have to drag it to the bottom.
Oh, you could draw. Oh, okay. That's a shame. Like my whole career sits on Zoom calls and I'm not trading, and yet I didn't know that. Okay, so all right. So the hot chains and tickers one is pretty simple. Let me see where I got it. You just go to that, you pop it in, but let me show you what I'm looking for in this, right? I'm not just trying to say, oh, is this on hot chains? It's gonna pop. No, that won't work. I'm looking to see if I could find something in common with all the orders on that ticker in hot chains to give me like extra degrees of confidence, right? So I'm looking through the hot chains and I see the first one I saw was WEA, that's the Walgreens, 46 call 7-1. This was on Sunday. So super outside the money on not that far of a contract. So then I decided to look at what the other orders were. And if you look at that, you're seeing all this bullish activity, even in the midst of this choppy, super bearish market. I'm seeing a whole lot of bullish volume on Walgreens. So now this has gone from just one contract has my attention to it has my attention. That's the hot chains. So then the second thing that I'm going to look at, and I put it right here, is I'm just going to do the flow cap screen. For those that don't know, all flow is a game of volume compared to open interest, size of contracts, and what the open interest is in those contracts. The simplest way to find out if something's going on is to use this rule. If the volume on a contract is twice the amount of the open interest, that play is unusual. Again, if the volume on a contract is twice the current open position on that contract, it's unusual. So here, looking at that specific contract that I found from the first place in my starting five, I see, oh shit, okay. WBA, whoops, I didn't mean to click that. WBA has 3,982 volume to 172 OI. All right, so like I'm not good at math. I'm a humanities guy, but that's like, you know, 1,000,000 to 1 or whatever this ratio is supposed to be 2, and that's like something ridiculous. So now this contract really has my attention. I'm also looking over here on the left-hand side when I'm on this screen. And the reason why I'm paying attention over here is because I want to make sure that what I'm seeing is ask side volume happening in a clumped up area. Why in a clumped up area? Because that to me says, oh shit, this is probably the same dude or the same group or the same people that have the same information. Because it's not little sprinkles throughout the day. All of a sudden, between 10:45 and 11:30, a bunch of motherfuckers got interested in Wall Street Boots Alliance really quick on those deep outside the money contracts. So looking at that now in our starting five, just reviewing, we have two things that have popped off for us. We have the hot chains, which showed us several bullish strikes. And now we've investigated the one that caught our eye. And we see that it probably looks like the same person or group of buyers with strong volume to open interest. The third place that I'm going to go is just looking at those contracts. And a lot of people don't do this. So when I looked at the contracts on that, what was the first thing I noticed? All these happened like within the same minute, right? So what does that mean to me? It's the same buyer. Now, the other thing I'm going to make sure is that I look at the spread when I make this determination on whether it was bid side, ask side. Because sometimes the spreads will be tight. So it'll come in at like 20, for example, this is 23 cents and 21 cents. That came in at 23 cents. If it came in at 22 cents, you couldn't really say it's bullish or bearish. Sometimes unusual whales will kind of screw you up on that. So you got to actually look for yourself to make sure it's on the right side. After I've looked at that on this screen, I'm looking at premium sizes. This is right here. Now, I'm going to say something kind of controversial. You know what I'm saying? I came to bring the controversy. Young Eminem here on the mic. People say that it's only large floor orders, and I've seen time and time again that that is not true. Think about it logically. If I am the Wall Street's Boots Alliance, nephews, brothers, sons, cousins, side chick, I'm not going to go just drop like 500,000 in this. These people want to stay under the radar. So they get their little, like this one right here, all off adds up to, I don't know. I'm bad at math again, maybe like 30 grand. But the key here is that 30 grand again, all comes in at the same time. This is a larger order being broken up into smaller orders. So when I see this, I don't even become bearish. I become more bullish on what I'm seeing. Because what I'm seeing is someone trying to kind of fly it low. This is what happened with Zanga. A lot of people said I was like dumb for looking at such small volume contracts, yada, yada. They add up, especially over time. So that's the other thing you're going to want to look at. Going back really quick to this one, I just want to say another thing too that you're going to want to be doing while you go, which is really, really, really important. It will be more important if I can find what I was looking for. Here it is. You want to make sure that that contract keeps the same volume and goes up and doesn't lose it. So here we see our boy hopped in for the 4,000, or no, I'm sorry, the 3,000. That translated to 3,000 open interest. The next day he hops in for 4,000, or someone else does. It adds to 4,000. The next day someone hops in for 1,750, or someone's, probably us at this point, bandwagoning, and that sticks. They're not getting rid of these contracts on a dump. Someone might even be adding more. So I'm watching this over time because I know that the moment that number goes down significantly and that open interest goes down significantly, they've left. They were like, it got too hot or the news isn't going to happen. So always be looking at these. I'm going to try.
So let me ask you a question real quick.
Yeah,
stop you there. For those that are kind of slow on the pickup here. Now, are we expecting, see these contracts are for July 1st. So we got a couple of weeks for them to expire. Are we expecting a huge news announcement? Are we expecting earnings reports? Are we expecting merger and acquisition news? Are we waiting for a news play here? Is that kind of the general gist of it?
I'm so glad you asked. So typically the first thing we filter out is earnings. This is actually a good thing to say. I ignore all flow that's on, near, or related to an earnings. For me, I always look for something that's happening before the earnings of that stock. Because earnings, people just do wild shit, right? Like I do, you do. Some people just throw money to throw money. But earnings always is out. Now with Wall Street Boots Alliance, this is where your research comes in, right? Like some of my biggest ones, like Zynga, for example, I knew it was a merger acquisition target because I did my research. Now here's what's interesting about Walgreens Boots Alliance. You do a little bit of research and you find that an Indian drug company actually has made a $5 billion offer to buy them. Last week, the market dumped so pitifully that nobody paid attention. It was tears in the rain. Now we see all these people buying it. So this is a really interesting situation because what we're waiting for is the delayed pop on a huge M&A piece of news, right? This is why you got to look into what it is that you're looking at, because this to me is better even than a speculative merger and acquisition. They've got the offer. The market is just catching up to figure it out. It's the same thing that we saw with oil when we all knew oil was going to boom. It took a while to get there. And then all of a sudden, everyone gave the surprise Pikachu face when oil jumped like 100% or whatever crazy thing it was. So Google researchers told me that the deal is on the table. Now we need to do is let the chips fall where they may. So it's an excellent pick, high risk reward for me in that opinion. The last of the flow pieces, and I'm going to try to talk quickly. I'm taking a bunch of time. Everyone's
take all the
talking
time
about,
you want, man. This is absolute gold. I love this.
Okay, cool. So the fourth is COPE divergence. So I'm going to take a minute to explain this because people are seeing it a lot on the intraday analyst page. There's so much to break down, but I'm going to give you the simplest pieces. I actually picked a really like zoomed out picture for this. I don't know why I did that. Let me go here. Okay, so here it is. We're looking over here for this little circle. The only good thing this laptop's good for. So notice the market nosedives, right? On the day of the night. The market nosedives, the stock nosedives. And then it kind of stays down here, low pricing. Look what happens with this orange line. Insanity, right? Like you don't have to be a genius to see the divergence between those two numbers. So what is happening? These spikes, let me back up. COPE is a measure of premium. Take out all the nerd shit, like all the super, like you gotta like measure the delta by the gamma, but like take all that out. All it is measuring premium. So what this is showing us is they can't hide big orders from us because boom, big order. See these? These are relative large orders. My scroll isn't going over this because it's an image, but you'll see the premiums jump by like hundreds, thousands, millions of contracts. And you see it happening all day on a day where the stock is trading down to choppy at best. So when we're looking at this tool, it's actually a good way. Like the more squiggly lines people see, I swear, it's like the more like they just think that they're looking at like the most scientifically advanced shit. This is so good because I'm just looking at the premium instead of having to search through a million orders. And then I can go back to the intraday analyst page, right? So I pull up the intraday analyst page and I just go look at the biggest option trades and I see what calls and sells were moving that price. I know if they're sell to opens, I can figure out if they're buy to opens, sell to close, because I can just go right here. So the intraday analyst page gives me both of those things. I've got COPE over here, just turn off gamma source and flow ratio. That's above our pay grade. We're simple. Calls and puts, two squiggly lines. So here we see what's happening with COPE. This is WBA right now. So look at this. Today, we saw a huge spike in bullish premium. I'm doing this live now. This is not the image from last week. And then we see a lot of that premium sell off on this dip as it goes down. It doesn't recover. So you're probably thinking, oh shit, my position's in the trash. Yes, but that's where we get to the fifth player in our starting five. And I will say more than anyone, flow is not to be used alone in this market. I know that I'm Mr. Flow, blah, blah, blah. You will get your ass handed to you if you try to go to just flow, period. So the first thing I'm using, you can see here, I got in the, this is our starting five. It's just my macro chart. I mean, I like hourly. I know most people like daily, but I'm here for a good time, not a long time. So I identify what I'm looking for. I'm watching a basic downtrend. with multiple failures at the breakout. Around here, where we first saw the play, it was touching a bottom. Now, here's the great thing about using a chart with flow or using it not. As I'm watching, let me see if I can zoom in here a little bit. I'm way better at TOS than trading you. So look, if we had taken our own advice, right, and gotten in back then, we see the COPE is taking the price up. So as this line is going up that we saw from, I'm just guessing at tabs here, man. We saw this line going up with these spikes that went down. Yeah, here we go, 6.9, 6.10. So we saw it going up. All we had to do was get in. And literally the TA is telling us, oh, we've hit the bottom. We're going to go try to touch that trend. So now you're in a flow play, but guess what? If you have your wits about you, you can drop out the flow play when you get to the top of the trend line, right? Like you're not married to that. So you can play TA and flow. So at this point, you might say, okay, I've got 20 contracts. I'm going to be greedy with 10 and let them ride for the eventual flow hit. I'm going to be smart with 10 and take my profits. The other thing I'm using a ton, I'm basically a price action trader at this point. I love it. It's making me a bunch of money on SPY and QQ. Player intraday levels. It's easy. I can't go into it on this call. People can DM me. I'm usually pretty cool about like getting to them when I can because I was taught for free. But these are saving my life in a market where you can't just trade flow. Doesn't matter how fucking far out the money the whale's going. They've got more money than God. You've got like $22. So they can afford to be wrong. You cannot. So you want to play it closer in the money and you want to use your levels. Because even though this flow play with the falling COPE maybe going out of style, if we actually just looked at our trends, we would have known where to sold and sell anyway. So that was super fast and yada yada. I'm going to stop sharing my screen, but starting 5, that's how I'm looking at trades these days.
Man, that was absolute money, brother. Thank you. I appreciate that. Hey,
Yeah,
Milt,
no
what's the best place people can find you, man? Because you got a lot of information here.
Oh yeah, at YourBoyMilt. I like to post a lot of shit like that. And then go to the eat.substack.com, sign up for the newsletter. We do watch lists every week. All of it's free. I started 2 years ago and I scraped my knee a lot. And a lot of people help me put Band-Aids on the bumps and the bruises. And so I'm trying to pay it forward as I go.
Yeah, you had to get some knee pads, huh?
I know, right? Yeah.
I feel you, man. Hey, y'all, thank you so much, man. That was awesome. Dwyane Trade, I see you still on here. I appreciate you, brother. We've been going for about an hour now. I mean, I'm going to go ahead and call it here. It looks like Bentley was having some technical difficulties. But, man, this has to be one of the most informative episodes we've done. I'm going to post this to YouTube afterwards for y'all's Discords and for your Twitters. Y'all be sure to check these guys out, man, because this is gold. This is what you need to be seeing. This is what you need to be learning. You know, a lot of people think they know what they're looking at when they see flow. Well, there's a lot more to it, obviously, than what you think. So I think it's really, really important to dive in and learn something. Thanks again, guys. I appreciate y'all. And we'll see y'all next Thursday, man. We got Adam Sliver next week. Hopefully Coach will pop in here. We got a few guests on the hook. Spartan Trading is going to be here. Matty Day Trades is going to do an episode with me on charting. The guy's a chart magician. So y'all keep listening in. I mean, hopefully y'all are getting something out of this stuff. I mean, this is not the kind of stuff that you get every day from looking at content on Twitter. You want to have a conversation? Hop into the chat. Ask these guys questions, okay? All right, guys. Well, we're going to stop recording here, and we'll see y'all next week. Later, boys.